Hi everyone, this is a technical analysis on your USD. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, with basically no change to the statement. The dot plot still showed three rate cuts for 2024, and the economic projections were upgraded with growth and inflation higher and the unemployment rate lower. Fed Chair Powell maintained a neutral stance as he said that it was premature to react to the recent inflation data, given possible bumps on the way to their 2% target. The US CPI and the US PPI beat expectations for the second consecutive month. The US jobless claims beat expectations last week. The US ISM manufacturing PMI beat expectations by a big margin, with the prices component continuing to increase. The US consumer confidence missed expectations, although the labor market details improved. And the market now sees basically a 50-50 chance of a cut in June. In Europe, the ECB left interest rates unchanged as expected at the last meeting, revising inflation and growth expectations downwards and maintaining the usual data dependent language. The recent Eurozone CPI beat expectations. The labor market remains historically tight, with the unemployment rate hovering at record lows. The latest Eurozone PMIs beat expectations on the services side, while the manufacturing one missed, dropping further into contraction. The market expects the ECB to cut rates in June. Now, on the daily chart, we can see that Euro USD recently broke below this 108 support following strong US data. The price bounced on the key 107.23 level and it's now approaching the 108 support turn resistance, where we can also find the blue 8 moving average for confluence. This is where we can expect the sellers to step in with a defined risk above the resistance to position for a break below the 107.23 level. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into the 110 handle. On the 4-hour chart, we can see more closely the resistance around the 108 handle, where we can also find the 38.3% Fibonacci retracement level for confluence. If the price were to get there, we can expect the sellers to step in to position for a break of the 107.23 level. The buyers will need to break above this strong resistance to invalidate the bearish setup and start targeting new highs. On the 1-hour chart, we can see that we have this minor support zone around the 107.60 level, where we can find the confluence of the 38.2% Fibonacci retracement level and the red 21 moving average. This is where we can expect the buyers to step in with a defined risk below the level to position for a break above this resistance with a better risk to reward setup. The sellers, on the other hand, will want to see the price breaking lower to invalidate the bullish setup and increase the bearish bets into new lows. Today we have the Eurozone CPI and later in the day the US ADP and the US ISM Services PMI. Tomorrow we get the latest US jobless claims figures, while on Friday we conclude the week with the US NFP report.